Hello and welcome to Investing Confidential. We're going to talk about real estate. I believe that we finally have hit the point of inflection where real estate is now going down. Now, remember, it's been going down all over the country with the exception of New York and Miami, but New York metropolitan area, the biggest metropolitan area in the country, is such a huge weighting on the all these indexes that we don't really see the true picture, but it's happening. Okay, so we're going to go through some of the slides. It's pretty devastating. If you're a real estate owner and you need to sell, you probably should sell now. But if you're a regular homeowner, this, you know, like again, these prices on Zillow were ridiculous anyway. But let's just start with the triggers, right? What's causing this? Okay, and the basic cause of this, outside of people being forced to go back to work, all of these COVID things that were ridiculous. You've got consumer expectations, not just confidence. Consumer expectations have plummeted worse than COVID. Okay, that's significant. Now, again, these numbers not that accurate, but with a trend like this and now plummeting below COVID, mainly initially because of tariffs, but I don't think, as I said before, this tariff thing was a sideshow. At the end of the day, though, the consumer is very worried, and it's been worried for a while, especially since the big inflation scare. Remember, inflation rates are coming down, but that's the rate of inflation, right? So we had 8% inflation, nothing came down. Hasn't been deflation, so prices are still up pretty dramatically. So it's not really helping anyone. The fact that inflation is only CPI is only up 2%. I mean, it's ridiculous. Another sort of roundabout thing to look at is obviously you have still a situation, and this is going to get worse, where you've got big tax burdens in places in the two biggest states, New York, California, where you still got disastrous cities, also Illinois, okay, Chicago, crime-ridden, all these places. People are leaving. It's been happening for some time, and it's going to accelerate. Okay, taxes. This whole thing you're seeing right now with Trump and the taxes and the big beautiful bill. Taxes are going to have to go up. I don't see any other way out of this. And this is what you're seeing, the fight in the Republican Party. Republicans don't like to raise taxes, but there are some realize that if we don't raise taxes, especially at the high income level, and again, I mean, you people, you can figure out my politics. It's kind of hypocrisy for me to say this, but there's no other choice. We got ourselves into a mess. The politicians have got ourselves into a mess. So high tax rates, consumer expectations are leading to the reality of today's real estate market, where existing homes, the supply is skyrocketing. Okay, months of supply. It's going to be 6-7 months eventually, but this is the highest in 6-7 years for existing home supply. And then you've got, again, these are new homes built by home builders in spec, and look at the inventory. I mean, this tells you all you need to know. Completed new homes sitting for sale, not being purchased. Exploded in value, absolutely exploding. And that's not good for overall real estate prices, because these home builders, they're all leveraged. They don't like to cut prices, but they're going to have to cut deals. They're going to have to cut deals, and it's going to hurt existing homes continue. So all this is leading to, around the country, you're seeing all of this leading to lower prices and a very high inventory. And again, active listings, realtor.com, highest in a decade, higher than 2019, which to me was one of the worst, sort of the bottom of the real estate market. So again, this is the beginning. And remember, real estate goes up fast, goes down real slow. So active listings are going to continue to rise rapidly throughout the rest of this year into next year. People are going to hesitate to sell their homes at a certain price. They're going to wait. They're going to lower prices. They're going to lower prices but this is psychology. This happens all the time. Okay, it happens all the time, and it's obvious where this is happening. The South, And this is Florida, folks. Believe it or not, this is Florida, the place where everyone wanted to move. And now people want to get out. They have the Florida has the highest inventory, I think, ever, highest amount of houses for sale ever, except for Miami. But the rest of the country is going to go in the same way Florida's going. A lot of listings mean a lot of inventory, mean lower prices. It's inevitable. There's nothing you could do. There's nothing you could do. Again, you know, price reduce, share of the market, it's higher than the last, I don't know, 7, 8, 10 years. Folks, the thing that we've been talking about for some time is happening. It's been happening around the country for a year, and now you're seeing it hitting these big markets, and you're seeing it in the numbers. And unfortunately, there's no stopping it. You're just people are gonna go look at their Zillow, and they're gonna see prices going low. And again, this is today, going into the big spring home buying season, the weakest start in 5 years. It's going to get worse, much worse. And you know, when you look at the reasons that you have this situation, it goes back to the great financial crisis, when you had Blackstone and the private equity guys and the hedge funds buying up all the inventory of single-family homes and renting them. As rates went down, this accelerated. It was a way for them to make money. You leverage. People are going to rent forever. They're never going to be able to buy, so let's just make everyone renters. And so then, you know, these fools all tried to outsmart each other, and all of a sudden you had a lot of apartments being built. Townhouses, apartments, homes. And now what do you have here? You've got huge vacancy rates in apartments, huge vacancy rates for rentals. These are rentals. And the rental market and the housing market are closely linked. So you're having high vacancies. They're going to have to lower rents. Remember, these institutions wanted you to rent forever. They never want you to buy. They never want you to achieve the American dream. I saw an article the last couple of days saying the American dream is dead, and I scratched my head like, what do you mean it's dead? It's coming back, finally. People have been priced out for 15 years. Now it's coming back. And the final reason why we're going to see an acceleration of prices going lower is because mortgage balances are they're beyond what they should be. Okay, we had after the financial crisis, people lowered down the amount of money they were borrowing. Again, housing prices went lower, and then all of a sudden, we started coming up, and then COVID, and then interest rates went to zero, and people borrowed a lot of money. So you can make a case that, okay, a lot of these balances are at very low rates. I get it. But still doesn't take away the fact that we've got a 13 trillion in mortgage balances. 13 trillion. Out of control. And not all those mortgages are at 3%, 2%. A lot of them were adjustable, and they're coming due, folks. They're coming due. And when you see rates at the levels they are now, mortgage rates, people are going to have to sell because they won't be able to afford it. And then you have HELCOs, which are home equity lines of credit, up almost 30% in 3 years. People just borrowing. They have to pay that back. And those borrowing costs are adjustable. So people who borrowed 3 years ago, 4 years ago, when rates were almost zero, folks, then they got problems because rates are not going down. So at the end of the day, all this is leading to high inventory, lower prices. Remember, we talked about that affordability index. It's still the most unaffordable time ever in the United States to buy a home. That's why it's better to rent. And again, it's going to take a long time to unwind this bubble. Okay, this is not like stocks which burst and then go down, then go back up. Real estate's is slow moving. It goes up real fast, but then down real slow. And by the way, This is not one of my advertisers. This is a great product. I just decided to wear a hat today, and I just grabbed one, and Element is there. But it's a product I've been using for quite some time, quite a long time, and I'm not going to promote it, but it is a great product. So bottom line is real estate has cracked. It's on a multi-year decline. That's confirmed now. And it could actually, you could actually see it begin to go even faster, housing prices going down based on the inventory and all this other. But let's just say it's a normal correction off of a huge bubble. Remember, the most unaffordable ever. So it's going to be multiple years that we're going to see real estate come down. So if you're a seller of real estate, good luck. If you're a buyer of real estate, very good time, but always, always be careful out there.